Good evening, everyone. This is James coming to you. It is 9:33. A little late to the party, but we all know. 9:33 p.m. Tuesday, July 4th, 2017. I know the market was closed today. You're probably out enjoying the holiday, having some fun with family, maybe watching the fireworks because it is that time of night. And you'll hear it in the background every once in a while, some pops and bangs and explosions from the neighbors doing their firework thing. Anyway, this is James from Dividend Stock Talk, where we go about investing in dividend stocks for weekly and monthly cash flow. I'm going to go through some of my personal trades and show you some of the trades that we have coming up or that we did from last week, projected into this week or carried over into this week, however you want to look at it. Let's just jump on in and see what we're looking at, because there's not very much for me to do this week because I seem to be stuck in a pickle. Yep. Let's quickly take a look. Now, if you remember from last week, let's go back to monitor. If you remember last week, we did about 8 trades, and we were shooting to make $2,000 last week. Well, what happened is I think we made around $4,000 last week, which is a 4% return for 1 week. However, what happened, we ended up carrying over ABBV. Let me quickly bring it up and show you where it is. ABBV. Try that one more time. ABBV. There we go. Okay, so ABBV starts the year out around 62, 69. Flounders around a little bit between 56 and 66. And it's going sideways for almost the whole year. Look at this. And then she finally breaks out at the beginning of last month, beginning of June. She settled where she is now at 72.42. Now, when we did the spread last week for ABBV, we made money on it last week, and we decided to do it again this week. So this week we're looking at, open it up, here we go, take a look at the trades real quick. This week we're looking at the 71.5s and 72s. Okay, where she is right now, 71.5 is way down here, and the 72 is way up there. So we're into the money now. So with this one, we're going to make money if the stock goes up, if the stock stays the same, and if it goes down. It can go down quite a bit, and we'll still be making the money that we want to. So I'm going to leave that position alone. Now, CL, which is Colgate-Palmolive, they are a dividend king. They've been increasing their dividends for over 50 years to their investors. They've been in business for over 100 years, and like I did say, they are a dividend king, right? They have to increase their dividend every year to their investors, and they have been, and it's a great company. Everybody's heard of Colgate-Palmolive. Okay, so Colgate has been floundering around a little bit between, what is this, 71 and 75 for, oh, so 1, 2, 3, 4, 5, about 5 or 6 months. She drops down to the 66 area. She trades there for 1, 2, 3, 4, 4.5 months, then jumps right back up to the 73 area, which is where she is now. So unfortunately, we have 1, 2, 3, 6 down days in a row, which is not good. However, it is a dividend king. They got their dividend coming up in the next 2 weeks. Now, remember last week, we get 3 weeks out of Colgate-Palmolive. So we did last week. Last week we kind of lost a little bit of money on Colgate, but we were able to buy it at, where are we? We were able to buy it at 74. Now, last Friday, this thing closed at 74.13. So we were able to buy it for a little bit less than what it cost. Okay, because it closed at 74.13. We were able to buy 5,000 shares at 74. Right now she's at 73.94. She went down a little bit. However, what I'm going to do today is I am going to sell somebody the option to buy this from me for the exact same price that I paid for it. Okay, so we are going to go in, hit trade, put in CL. Now we paid 74 for it. So what I'm going to do is I'm going to sell it for 74. Okay, here's a 74 call. Okay, you come up to the option chains right here, and we want to click on the singles. The singles here, vertical. These are the only two I'm going to show you. All this down here is getting a little bit more complicated, and you need a little bit more education in order to get into this. Now I understand a lot of them. I don't do a lot of them because I told you guys before, I'm a very lazy trader. I look for consistent, predictable ways of making money. And I'm not looking to make a huge amount. I want to make $1,000 or $2,000 a week. That's it. Okay, and I'm happy with that. All right, so what we're going to do, we're just going to single. Now we bought it at 74, so I have two choices. One, I could sell it at 74 and get 52 cents per share, which is like, I don't know, 2,300 bucks. Or I could sell it at 73.50. Now, and that one makes me like $1,000. But I have a long way to go. See, right now, if I sell this 74, the stock has to go up 6 cents in the next 3 days in order for me to be called out. And if I'm not called out, I will continue to own the 5,000 shares going into next week. And then in turn, I can do it all over again. But remember, the end of next week is when the dividend is actually paying the EX dividend day. So I have to get rid of it by next Friday. All right, so let's just do this. I'm going to sell the 50 contracts at 74 for this coming Friday, which is only 3 days away. So we have Wednesday, Thursday, Friday, 3 days. And for that, I'm going to make 2,600 bucks if this stock closes above 74. If it closes below 74, I continue to hold the stock and then do it all over again. So, with that being said, let's give this a shot, and booyah, there we go. 2,600 bucks. So if this gets filled tomorrow morning, that's 2,600 bucks we got. Okay, it's back to monitor. Okay. Imagine that. Yumbridge, you see this right here? This account has no available buying power. Why? Because I ended up with 5,000 shares of Colgate and 5,000 shares of Yum. Okay, so I didn't want to do 2 of them, but I ended up with 2 of them. Okay, let's put Yum in here. Y-U-M. Yum Brands. Yum Brands starts out the year with a $61 area. She trades in a range between 65 and 60. As you can see, she's flounders around. She one peak right here in February this year, second week of February, but right back down to that trading range again. And just recently, this May, she jumps out of that trading range into the $60, $70 area. So she's at 73 now. And where are we with Yum? I believe we are at 73.50. So at 73.35, which is a little bit under, what I'm going to do is I'm going to go in this one and do the exact same thing. I am going to sell it at the exact same price that I paid for it. So here we go. Put in Yum, Y-U-M. And 73.50. And we have 50 contracts. 50 contracts. Here we go. And see what we're looking at. $2,200. My goodness, excuse me. All right, so we got $2,600 from Colgate and 22 from here, from Yum Brand. So we can look at close to 4,000 this week. Now we only made about 2,000 or 3,000 last week, so this week we're looking at to make around 4,000, but not really because we did have to pay for some of it. How much was our profit? We'll find that out on Friday. Okay, so there we go. So we got those 2 up for sale. Now, I personally can't trade anymore because I got a T-rig call, which means I got to come up with another $100,000 in order to make a trade. So I can't really do that. And we were going to catch you later. Can I
Where can I find
have a few minutes so I'm broadcasting live? Thank you. Sorry about that. Children are just waltzed on in. Okay, so let's get back to Market Watch. And here's where we are. Okay, today being the 4th, we want to look 2 weeks ahead of the schedule. So today's the 4th, tomorrow's the 5th. So the market's back open tomorrow. So what we're going to want to look at, look at the week of the 16th, which is 2 weeks away. Now, that's not a lot to look at. We have 6 companies on Monday. Clorox, all right, let's go look at them one at a time. All right, West Pharmaceuticals, never heard of them, 13-cent dividend. VSEC, only 7 cents. I'm not 100% sure I want to do that because I don't like chasing dividends that small. Pier 1 Imports, another 7 cents. Everybody knows who Pier 1 is, or I think everybody knows who Pier 1 is. Another 7-cent dividend. Do I really want to chase it? I'm not sure. Oracle, 19 cents. Oracle's a good company, been around for a while. They make software. GHC, Graham Holdings, they're paying out $1.27. I'm kind of curious of what the stock price is on that one. Colgate, CLX, 84 cents. Nice dividend. That's for Monday. So Tuesday, what do we got? Caterpillar is basically a no-brainer. Main Street Capital Corporation, 18 cents. Okay, not bad at all. Horizon Technology Finance Corporation, 10-cent dividend. Just cutting it in there because I don't like going below 10 cents. Harvest Capital Credit and Caterpillar. Caterpillar, basically a gimme, you know. Like, hey, let's do Caterpillar. Find out what's going to. We got a few more to look at. Here we go. WSM, Williams Sonoma, WD-40, Pent Air, Elmer, LTC Properties, US Ecology, never heard of them. CPTA is Capitala Finance and Apache Corporation. And Thursday we got CMRE, which is Costamar, never heard of them. BCR, CR Bard, never heard of them either. Now this is a tough one. American Capital Senior Floating. Don't know who they are, but 9.7 cents. Cutting it in there. I don't know. Let's take a look at everything, see what it looks like. Okay, let's just jump back on Monday. Let's take a quick look. WST, here we go. West Pharmaceuticals Company. Going sideways between, what is that, 72 and 84. That's a $12 spread, you know. But we did that for 8-9 months. Makes us a little jump up here, and here we're going sideways again in the 93 area. Let's take a quick look at WST. Oh, you know what? I have to go back to here and find out who's doing weekly, because I don't want to trade all these guys. No, thank you. Just that's it. Break it down to 3 companies because, as you can see, the 7th is the first Friday of the month, and I want to do just weekly. So we have Oracle, Caterpillar, and APA. So let's quickly take a look at Oracle West. Sorry, guys. ORCL. Oh, no, that doesn't look good at all. She goes sideways for quite a bit, between 38 and 41. She breaks out into the 44 area for a couple months, and then last couple of weeks, look at this, 622, the end of last month, this thing jumps with huge volume. That's triple volume. She jumps up to 51. Now, even though they have the dividend coming up in the next week or so, I don't like to trade quick gaps with triple volume. And now let me tell you why, especially a gap up. A gap down, yes, I would do that, but a gap up, no. Because stocks have a tendency to fill gaps, the gap between here and here. It's going to fill. This thing's going to continue to drop until it gets back to a logical space where it should be. Now, you can see the volume already went back to normal. Okay? But the stock is at 1, 2, 3, 4, 5, 6. Now, I'm going to count this right here as a down day because it didn't go up, it didn't go down, it kind of stayed where the same. So you get 6 days in a row that looking bleak. Even though they have the dividend coming up and they do have weekly options, I'm going to have to pass on Oracle because I don't like the gap and I don't like the triple volume. The triple volume I like if it's favorable. At this moment in time, it's not favorable because it's going the opposite direction of which we really want to go. Okay, so let's look at Caterpillar, CAT. Caterpillar, nice company's been around for years, big machinery. Starts off the year at 75, does nothing but climb, almost like, well, she goes sideways she went sideways for 2 months here at 82. shot up. That looks like profit taking to me for a month and a half. Then she shoots back up again to the 92 to 97 area. Goes sideways for 6 or 7 months. And then she shoots up again to settle into the 106 area. Now, Caterpillar has a 78-cent dividend. 106.97 and the high was 108. So there's room for it to go before it hits the high again. Okay, so it hit a high right there at 108, 2 down days, right back to it, and she went right back up to the 108, 109 area. So I think that looks favorable. Now let's quickly take a look at what the seasonality looks like for this.
Maggie, you bitch.
Okay, the blue represents where we are now, and the red represents historical performance. Okay, so here's where we are. Now, as you can see, for the next couple of days, this thing's going to go sideways with a little bit of an uptrend. I can deal with that. Next week, she's going to go up right into the dividend. That, my friend, is a buying signal. So let's see what we can do. CAT, Caterpillar. Here we go. Now, Caterpillar's closed at 107. Okay, so we want to go back here to the option chain. Click on this and hit vertical. Now we want to look at the 106, 107, but then it has to go up. And I don't like the fact that it has to go up. So let's move one in to the 105, 106. So if the stock stays above 106, I make the money on that. Now, she's trading around 76 cents. Okay, so if we buy that, we're only going to make around 24 cents, which is a little over 20%. Okay. Okay, so at 10 contracts, we can look at making 240 bucks, and it's going to cost us 780. So that is pretty close to 30%. Okay. Now, I personally can't do this because all my money's tied up with Colgate Palmolive and what is the other one? Yum Brands. So my money's all tied up, so I can't do this trick. But if you guys want to take a look at it, do your research, and figure out if it's right for you, you can make 30% in the next 3 days. Well, 25 to 30% in the next 3 days. All right. That being said, let's move on to the next one. Caterpillar's good. APA is the next one. APA. Okay, we're going to say no to APA right off the bat. See, this is where the seasonality is right now. Okay, and if you cross-reference it right there, that looks like a downtrend. Do you want to trade into a downtrend? No, I do not. Let's go back to standard and see what that looks like. Okay, so here's what it looks like. She starts out the year somewhere around 55. She drops down for 49, trades there for about a month and a half. And with some, look at the volume right there. That's nice. That's like triple volume. Gaps up, but it's going to the right side, so continue going up. I can deal with that. Okay, but she does have a tendency to fill. See the gap here? She fills right over here. It takes a few months, but she does fill. So the gaps have a tendency to fill one even go in the wrong direction. Okay, so she makes the high in the year right down here at 69, slowly drops down here, make a low of the year at 45, bounces off of that, and now she's had 4 days in a row. You know, this one may look favorable because the chart says it looks good, but seasonality says that it doesn't. So this is one you're going to have to choose on your own. It's a 25-cent dividend. Okay, this chart says that it's going to go up because that's chart reading. You know, chart reading is not always right. You know, is this a high? Is this a one? You know, can it continue to move up and meet this one here? You have a triple top. You know, you got 1, 2, 3. Could it be? I don't know. I can't tell you that. You know, the market maker would know. Now, would I do it if I had the money? I'm a little iffy on that one. I'm not 100% sure because seasonality is basically going by historical performance. How has it done historically over the last 10 years? The way I have mine set up, I have 10 years worth of data. Let's quickly go back to that and I'll show it to you again. Okay, this is what the stock is doing right at the moment. Okay, she's going down right now. This could be the bottom. I don't know. You know, she could hit bottom and she could just continue to go up, sideways. Who knows? But this is what it does historically. Okay, She basically goes sideways all year, and then right through where we are, with a little downturn, up and then downturn again. So it's not very favorable at this moment in time. So with the 3 weeklies we have available for us this week, I'm thinking Caterpillar is the only one that is really favorable. I mean, the charts look good. The software says, hey, she always goes up right just before the dividend date. The dividend date is coming up. So with that being said, there you go, Caterpillar. All right, I'm going to quickly check, see if I have any questions before I breeze on out of here. Hey, James, what are some of the other things to check before deciding on trading the Caterpillar weekly? I agree, it looks very solid. What are the other things to check? All right, let's quickly take a look at what other things can you look at before you actually make that decision. Okay, Caterpillar. You know what? I'm not familiar with the intricacies of that, so I'm going to go to what I'm used to using, which is Yahoo Finance. Yahoo Finance. Where is it? Right here. Here we go. Look at that. The North Korean missile tests a new escalation of threat. Yay! Big deal. Okay. I really shouldn't say big deal because it could very well be a big deal. I don't know. And we are looking for Caterpillar, right? Come on. Here we go. CAT. CAT, come on. CAT. Nope, not there, huh? Come on. C. There we go. AT. Is it going to work on this one? I don't know. Well, just because I'm used to it doesn't mean it wants to be favorable at the moment. Okay, CAT. There we go. Okay, where is it? I just clicked on it. Come on. Alright, sorry guys, you know, it usually works very well. There we go. So let's see that. Here we go. Quote for Caterpillar. Alright, thanks. It took long enough. Alright. Here we go. We're looking at Caterpillar. Now, this is a lot of information here. So what is it specifically that we're looking at? Now, today's range, that's lovely. The 52-week range, between 73 and 108. Volume is around 2.4 million. Okay, it's a nice volume. Click on that. All right. It's got a 1-year target of 106. That doesn't make me a happy camper, but we're only trading it for a couple of days. We want to get in, we want to get out. Okay. Earnings per share down 25 cents. That does not good. The PE ratio. That's what that is. Beta, that's what that is. Bid and ask, can't really tell because not the average volume is around 5 mil. 1-year target, we already went over that. The EX dividend date, that's coming up in the next 2 weeks. Let's go at full screen. Take a look at this interactive historical data. Okay, that's 1 day. I don't want 1 day. I want 10 years. Now, I'm going to look at the 10-year chart only because give you an idea of what we're looking at. Now, when you're looking to trade something, it's the way I'm looking at it is, if I have to hold on to this stock, is this a stock that is going to make me a happy camper over the next 10 to 15 years? If I have to hold on to it, look, all the dividends it's been paying out. Paying out dividends, nice, 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 okay? 10 years ago, we could have bought Caterpillar at 56. Where is it today? It's almost 100% increase, okay? Between that day and today, we are looking at 87.74% increase from 10 years ago. Now, my friends, that's not bad, because you're continuing getting a dividend every 90 days. Every 90 days, you get a dividend. Look at this. 2007, 36 cents, 36, blah, blah, blah. Look at that, jumped up to 42, jumped up to 42, jumped up to 44, 44, 46, 52, 60, 70, that says 70, 77, 77, and 77. Okay, so that's where we are now, continuing to pay out higher and higher dividends every year. So this, I'm not going to say you can't go wrong. It's Caterpillar. You've seen these things on the side of every construction site there is. They make big machines that do construction work. That's number one. Number two, you've seen the growth within the last 10 years. I mean, it's a 87% from 10 years ago to where it is today. When the market tanked in 08, 09, right there, dropped down to 19 bucks. Can you imagine that? 19, you bought Caterpillar for 19 bucks in 09. That's after the real estate boom crashed. The financial markets crashed. From then to here, anyway, it's a nice increase. So if you want to continue to look at more data, for Caterpillar, add indicators, compare, blah, 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 area, blah, 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 settings, blah, 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 reset. I don't want to know all that stuff. But here in Yahoo Finance, you can find out all the information that you need. All right, back to the main page for Caterpillar. Let's see what we're looking at. Come on. I don't want to look at the 10-year chart. I want to look at the interactive stuff. Wow. Let's see what she looks like back now. Down there. Reset, interactive chart, blah, blah, blah. Alright, she's not going back to where I want it to go. I want to go back to the regular page. Finance, Caterpillar, blah, blah, blah. Yeah, that's all the same. Anyway, that's where we are. Let's go back to dashboard, find out any other questions. No other questions for Mr. Sam. Let's go back to my I'm not. Alright, where we go? Come on. Caterpillar. Go back to regular chart. There we go. Alright, so this is what Caterpillar is looking like for this year. Okay, so you've seen some of the research. Go to Yahoo Finance, find out all the information you need to find. Ask yourself, is this a company you want to hold on to for 5, 10, 15, 20 years? Or do you want to just keep trading it? Buy it, you can do a covered call on it. Buy it at 107 and sell it at 107 by the end of the week. Let's quickly take a look at, okay, single. All right, so if I bought it first thing tomorrow morning, let's say it opens up at 106.97, okay, and I wanted to turn around and sell it the exact same price I paid for it. Let's say we sell it at 107. I could sell the 85. I could sell the 107 for the end of the week. Okay. So if I buy it at 106 or 107 tomorrow morning, I can then tomorrow morning also, just after I buy it, turn around and sell the contract for someone to buy it from me for the exact same price I paid, and I can get 85 cents a share. Okay. That's like buying at 107 and selling it at 107.85 on Friday. I mean, granted, 85 cents is not a lot of money, but hey, you're buying at 107 and you're selling it at 107, and then you collect an 85-cent premium just for buying it and selling it for. Anyway, it's almost like free money, almost, but you got to have the money to buy it in the first place. Anyway, Caterpillar is the only one I can come up with this week, only because. Not very many variables out there for us. Not a lot of stocks for us to choose from. Okay, so no more questions. I am out of here. You guys have a great evening. Hopefully that was helpful for you. Cancel that because I don't